Hello, and welcome to Monumental, where we sit down with entrepreneurs, leaders, visionaries, and big thinkers making monumental change. Here's your host, Evan Holliday.
Welcome to Monumental. I'm your host, Evan Holliday, and today we have on the show with us Gene Trowbridge. Gene, how you doing today?
I'm doing great, Evan. Thank you.
Yes, very glad to have you on the show. A quick background on Gene before we get started. Gene is the founding member of Trowbridge Law Group LLP, and they concentrate on syndication of commercial and investment real estate through both debt and equity. And Gene has represented over 500 clients in this area with a median offering size of $2 million and serving offerings all the way up to over $100 million. That's pretty impressive. I'm excited to get into that. Just a little bit more on Gene. He's a former syndicator himself for 10 years, raised investor capital, and was intimately involved with those deals. And then as a senior instructor at CCIM, he's won numerous awards for his teaching ability. And his book, It's a Whole New Business, is really a how-to model on real estate syndication. Gene, I'm excited to have you on the show. Let's just dive right into your background and how you got into real estate.
Sure. Well, that's great, Evan. And I'm happy to be here. Well, my career has really had three phases. I came out of college, University of Minnesota, as a accounting major and went into commercial real estate as a broker. And I did that for a while. And somewhere along the line, some friends and I bought an apartment house in St. Paul. And I also went to some educational events, which introduced me into the idea of pooling money from others to buy real estate. Because, I was a kid, I didn't have enough money myself to buy all the real estate I wanted. So pooling sounded like a pretty good idea. So I did that. And then I found that I liked that. After doing 3 or 4 of these groups, I found that I liked that. And I found that I was going to move to California for the weather and a change. And I said, okay, when I get to California, I'm going to be a syndicator, just full time. I'm going to forget being a commercial broker. I'm going to be a syndicator. And so I raised money for about 10 years, most of it through the broker-dealer community. And Evan, I primarily built storage facilities. We had 16 syndications I did, and 12 of them were storage facility syndications with 2 properties in each syndication. So we built about 24 storage facilities. And then after I stopped raising money, I had, 6 or 7 years of income and asset management and things to do with the properties. And I decided I'd go to law school. So at 45, I'm off to law school. Nice. With a wife who's working, 2 kids, and this wrapping up my syndication business. And came out of law school, and I've been doing that for, 27 years now, putting together mentoring, if you would, and being an attorney, helping people get into the syndication business and hopefully be successful. So, and somewhere in there, I spent 40 years teaching in the CCIM program, which was just another mentoring opportunity. Evan, I've been real big in what I call education-based marketing. My marketing has always been based on good information that I've given people, and hopefully with the good information, they decide that if they need something, I'm the person they would call. I've been involved in a couple law partnerships. I have a brand new one that's just started about a month ago, and it's always fun to bring on younger attorneys with me and train them and get them up and running. And I think this is probably my last one. When I get rid of this one, I'll be retiring.
That's quite the story and quite the journey.
Hashtag Not retiring yet.
I think hashtag not retiring ever, right?
Yeah, could be.
So going back to when you first got started, why did you buy that apartment building? Was there something that pushed you all to do it, or was it some education that you got?
Well, I had a house. My wife and I had a house, and I had two rental houses. And I was finding that managing those two individual rental houses was a little more cumbersome.
Yeah.
And some of the guys I went to college with saw that I was in the real estate business, and that's what I was doing. And in some social gathering, we said, "Well, why don't we pool our money and buy something a little bigger?"
Yeah.
And so I said, well, I could do that. I'd manage it. And one of the guys was an attorney. Another guy was a CPA. And then there was an insurance agent. And we all went to college together. We all had some money. We all owned our house. We had some money. And we if you can believe it, we each put $10,000 into a kitty and bought a 12-unit apartment house in St. Paul that we bought for $10,000 a door.
Wow.
That was a while ago, the last century, right? And so we were not highly leveraged, and we were on our way. And here's a success story. When I moved to California, since I wasn't going to be managing it anymore, we sold, and we went our separate ways. And one of my partners took the money that he had from that project and invested in another project, and has never sold anything since. So that would be 40 years, and fabulously wealthy now in the Twin Cities, owning free and clear apartments all over the Twin Cities. And a great way to create wealth. You can do it passively, or you can do it as a syndicator. In his case, he just wanted to own the property himself.
Yeah.
And my career was taking other people with me and helping them make some money along with me.
Yeah. Yeah. That's one of the things I love about real estate is you can have so many avenues to go down as far as the way you structure deals, the way you finance them. If you want to do it by yourself, with partners, JV, passively, all on your own, like there's really a lot of different options. There's also so many different types of real estate. So I wanted to dive in quickly to what you said earlier. And you told me a little bit about this previously when we were talking about how you would do the syndications, your syndications with the storage. How did you said you rolled in basically the land and the storage development into one fund. Is that right?
Yes, I found a person who had experience with concrete, a contractor who was a concrete guy. And we decided that with his experience in pouring concrete and my involvement in some organizations where I was, where people, they could already buy groceries, they weren't going to need a cash flow. So we thought we would look at building something. And when we started out, we looked for a piece of dirt. We found a piece of dirt, and then I said, well, that's really not a big enough offering, raising money for that piece of dirt. So let's make it something that's called a semi-specified offering. And so we had one piece of dirt tied up. We had the plans. We had everything all ready to build with a construction loan. And then I raised enough money so we'd buy the second piece of dirt, unidentified at the time. And then we'd get one project going. Then we'd get the construction loan for the other project, and we'd build them in. And our plan was not to be long-term investors in storage facilities. Our plan was to create value for our investors and sell. One thing, Evan, that I've learned in the business, and I see it all the time today, is a syndicator is one of two things. You're either a product specialist, which I turned out to be. I turned out to be a construction, storage, tilt-up concrete specialist. And as a product specialist, I would know, or I did know, what were the economic benefits that came out of that property type, that phase in the lifestyle of the life cycle of the property. And then my challenge, Evan, was to go out and find investors who wanted those economic benefits. Okay. And that's one type of syndicator. There's the other type of syndicator, which is, I know you've had Michael Flaherty on your presentation.
Yes.
And he's one of my clients, and he and his partner, Derek, they're what I would call social syndicators. They have a group of people and that invest with them over and over. And in their group, they really have identified the economic benefits that group needs. So they started with the people, they dealt with the economic benefits, and they said, well, what product type and what phase in the life cycle of a product can we invest so that their clients get what they need? One of the big mistakes you can make in the syndication business is bring a product to the marketplace that doesn't match the needs of your investor group. Okay. So if I was going to deal with all retired teachers, I would never build spec syndication projects.
Anything risky, yeah.
But if I'm dealing with nothing but accredited investors, high income accredited investors who are trying to build their net worth, I would never really buy single family houses for rental. It just doesn't fit.
That's interesting. And that brings up a good point. You've seen all kinds of syndications. You've been a part of all kinds of syndications and capital raises. What have you seen as far as what makes a successful syndicator and a successful deal?
Wow. Well, the real estate aspect is one thing. I think we all should understand the real estate aspect, doing the due diligence, doing correct projections of NOI and cash flows and funding and all that. I'm not all that into that. I think people are going to get trained to do that. But what I'm into is the syndication side of it, which I believe is more to do with the managing of people than it is of properties. Evan, I have had a lot of clients, and in the last, let's say 6-7 years, the most recent business, a lot of our clients are going to Texas to buy properties.
Yep.
But our clients aren't in Texas. So they're working with professional property managers in the due diligence and on the ground brokers in the area. And so they get all that information. But what they're trying to do is they're trying to manage, 30 people who come out of Phoenix who want to buy a property in Houston and who have lives. One of the things I learned early on is when you get 10 or 20 investors in a deal, and maybe the life cycle of the deal is projected to be 4, 5, 7, 10 years, someone's life is going to change during that period of time. We can deal with the property, tenants move, mortgages do this, that's fine. But when someone's life changes and they call you because you have their money, Evan, you got their money. When they call you to solve their problem, you better be a people person. You better know that. So all the good syndicators I know are extremely strong in their people skill. I've had some syndicators, Evan, who have started with me, and after 1 or 2 deals, have said, no thanks. I'm just going to go back to be a broker or whatever I was. I've had some syndicators who have had a terrific experience and be passive investors. I've had guys and ladies who've called me with, I've invested in 20 passive deals and now I want to be a syndicator. My first question is why? I said, we can make more money as, okay, fine, try it. 1 or 2 deals, they go away, But, and that's the way they are. I've seen people who like myself, once I dabbled in the syndication business. I got away from the brokerage business because there's some conflicts there that I don't think work. Then I've had some brokers who came to me and tried syndication, and no, I didn't like that. I'm going back to the brokerage business. And there's some people who can do it both ways, and that's the unusual person, I think. But not everyone can be a syndicator if you're not a people person. And a lot of commercial brokers aren't people person. They look for deals and they're hard, and that's not going to work. So
yeah, that's a really good point.
It takes a team, Evan. It takes a team.
Yeah, it's a really good point. I'm glad you brought that up. Is people skills are priceless when you're dealing with people's hard-earned capital, and that is the source of how you are able to fund these deals and how you're able to buy real estate and grow your assets under management or your holdings or your multifamily communities, whatever it is. You have to have the implicit trust of your investors, and they have to know you, like you, and trust you. And if that's not the case, then they may not be around forever.
The reason that I left the active role of a syndicator, there were really two reasons. First of all, I got to a point where, in the height of my insanity, is what I call it, I sent out 1,676 K1s one year.
Whoa.
Representing about 850 investors. And Evan, back then, there weren't the companies that are available today that would do the back office work for you. It all had to be done in-house.
Oh my gosh.
And I got to the point where I was just going to have to, probably have to rent more office space, hire more people if I was going to continue to grow, probably do bigger deals.
Yeah.
I wasn't ready to do that. And the amount of money that I had under management became a concern to me. I didn't want to go any bigger. This is enough. And there have been 3 times in my life that I have in the business world faced growth or pullback and consolidation. And every single time I've pulled back and I've consolidated. That's just me.
I like it. In segueing into what you talked about, I liked how you worded it: education-based marketing.
Don't you love that?
Yeah, you were a thought leader before that was even a word.
Well, I think that's one of the things I bring to my clients.
Yeah.
Is, the experience of having done deals and worked with investors and working with the broker-dealer community and see how the professional money raisers do it, and a broad background in commercial real estate. And I'm a storyteller. And all those things help. Yeah.
So how do you just brought up a good point. How do professional, how do the bigger real estate groups, syndication groups, private equity groups, in your experience with working with them, what could some of the smaller groups learn from the bigger professional groups?
Here's what someone taught me, okay? And I have a full presentation on this, but I think for right now, I'll just shortcut it. It's the really good money raisers sell the sizzle. And Evan, there's 4 steps to selling the sizzle. The first step is selling the sizzle of the real estate industry, okay? When you're out looking and talking to people, sell the sizzle of real estate. If no, I'd never be interested in real estate, I'm just in the stock market. Okay, well, you don't need them. Building your database, building your network, first of all, with people that buy into the sizzle of the real estate industry. Then, secondly, pick a product type and a phase in the lifestyle of that product where you can sell your expertise, sell the sizzle of you in that product type. Have you uncovered a need? As an example, I've had a lot of really good apartment syndicators move toward mobile homes in the last 4 or 5 years because they've uncovered what they call the next era of low-income housing. And they think there's a market in that. So the sizzle of real estate, the sizzle of being an expert, being able to identify a problem and then come up with a solution and sell the sizzle of that.
Yeah.
And third, sell the sizzle of your team. Do you have a team that can execute your plan, seize on the opportunity, be strong enough to resolve the issue and turn it into an opportunity? You never sell anything. You invite people to come with you in this new opportunity that you found. Somewhere along the line, I was going to get into the securities rules, so here we go. If you have a client that you've sold on the sizzle of real estate, you have a client that you've sold on the sizzle of what can you do in the real estate industry, that you're a specialist, what problem did you identify, how are you going to solve that? And if you're going to sell the sizzle of your team, I bet when you have an offering, you already have a pre-existing substantive relationship with that client. They're just simply ready for you to show them the offering. And why was that important to me? I was doing it backwards. As soon as I got my PPM, I would go out to people and I would start pitching my deal. That's the last thing you pitch, because I had to work backwards.
Yeah.
And I was pitching my deal to people who were never going to invest in real estate.
Yeah.
The minute I changed my mind on how, and my approach on how I was going to build my database of potential clients, my marketing results increased dramatically.
Yeah. Yeah. I really like that. I think that's something everybody can take home. Selling the real estate first in general, sell what your product type or what your specific niche within that product type and how you can best take advantage of it. Sell the team, and then fourthly, sell the deal.
The deal. Sell the sizzle of the deal is the last one. But by that time, that shouldn't be too terribly complicated.
And so you've raised all different types of deals, different syndications, different structures. Coming out of COVID, coming out of the pandemic, coming out of everything that's going on right now, where do you see opportunity in capital raising going forward?
Well, what I have seen in the last 4 or 5 months and what I've heard from existing clients or potential clients really goes toward, is this going to create an opportunity? Is there going to be blood in the streets?
Yeah.
And a lot of questions on forming a fund, a blind pool, so you can go out and you have the money, you can be ready to make an offer and convince the seller that you have the money and close quickly. However, I'm not positive there's blood in the streets. I don't think the rent collections in April and May were as bad as people thought they were going to be. And generally we're talking multifamily, right?
Right.
I don't think it's all that bad. So I'm not positive that that's the issue. However, I still like the opportunity for someone who has a track record. And here's my legal advice: if you don't have a track record, don't do what I'm talking about, because you'll never raise any money. Marketing without a track record just won't work. But if you have a track record and you can put together some money where you can go to your clients and say, we buy these properties one at a time. I'm going to raise some money this time and I'm going to buy 2. Well, that's exciting. So now we're diversified. All right.
Yeah.
And we're going to raise the money up front. You know what we're going to do? We're going to be able to compete with all those 1031 buyers that are out there. Because I'm losing deals every day to people who have their money sitting with the accommodator and can close quickly. I'd like to be able to compete with that. So I could do that if we had our money. And, I did a lot of, like I said, semi-specific, which means you have one property, but you're going to raise enough money to buy another one that you don't know about. That's a marketing ploy. That's one step better than a blind pool, because it really isn't blind. You have a business plan, you execute the business plan on one property, and you tell your investors, I can do the same on another property, I just need the money. Very, very good. And diversification is a huge seller to investors.
And that brings up a good point. I think something we've contemplated, and I've seen other groups do it, is having almost like a revolving fund for deals, for also if they're in development, for land. Is there within that fund, can you buy and sell real estate and still keep everything in?
It depends. It really depends upon what your product type is. For example, flippers, okay?
Yeah.
And there are still flippers, but they're generally in the Midwest. I think the California market is kind of saturated, but generally in the Midwest, I think I have 3 or 4 clients who are flippers. And we write the operating agreement that says, you can buy this property and do whatever you need to do and sell it. And if it sells within the first 36 months, we can automatically take the money and buy another property.
Oh, interesting.
Any capital transaction later than 36 months, we do a self-liquidation. So one of the things that does is it allows the syndicator to roll their money once or twice, which is kind of good. Just raise it once and do that, and then keep the investors involved. Sometimes the structure is, we'll buy a property, and when we sell it, we'll give you the earnings, and we'll take the original principal and buy another property.
Reinvest.
And that works with hard money lenders. We have clients who are lenders. And you make a loan, you get the money back, and within 36 months, you can roll it. 36 months isn't magical. It isn't a securities rule. It isn't anything. It's just that my experience tells me if you go too long, you're in trouble. You're not a bank. Investors like to make decisions with their money. So I think they'll sit still and let you move it once in 36 months. But now you're into 5 or 6 years, which is a typical holding period today. You kind of have to give them their money back. But that doesn't mean, Evan, that you don't have a new offering ready for them when you're
ready to go.
The new money to come out. So I think that works. But from the securities side of it, almost all of us are doing Regulation D, 506 offerings. You have 1 year to raise the money. So your money raising has to be kind of wrapped up in a year. And then you can continue to use that money. But see, the disclosure issues are, if I started raising money today and I told people what I was doing in my projections, but I'm still raising money a year from now, how do my projections go? What am I doing? It's time to do a new disclosure. So I'm not saying you can't take money raising into the second year. I'm telling you, you'll have to file a new Form D, and I believe you have to come up with a new PPM and tell everyone what your track record is.
That kind of makes things a little bit less clear if you're continually raising money after the fact.
But there are ways to do that, but just not in the private placement market. Which is
I've also seen some groups where they're creating like this, almost like a bond. It's just like a monthly 6% return on their investment. No upside, no downside, just straight 6%. And it's a fund allowing that group to go out and buy real estate.
No, that's fine. We do that, put together an LLC, everyone comes into the LLC, and all they're going to get is a stated interest rate. Sometimes the LLC makes loans to another group that's acquiring the property, or
Yeah.
that's just all you promise them. Now, that's a little dangerous, because if things go bad, someone might come down and say, that really was a loan. And do you have some liability as the sponsor if what it was a loan? Be very careful that you make it that it is a deal. We're using the money, and it might be like a bond, but we're not lending. But another thing I see is I have too many times clients come to me and say, well, as soon as my investors get a certain yield, Evan, I want to pay them out, then I want to keep the property and go forward.
Yeah.
Oh, the risks and conflicts with that concept, that'll get you sued, because you're going to buy me out after 3 years and this property is a home run. Well, if you told me it was a home run, I wouldn't have sold it to you at the price I did. So I'm going to sue you. The way you solve that is do what you just talked about. All I'm ever promising you is a 6-8% yield.
Yeah.
And at a certain time, I'm going to pay you off, and you've never been promised anything else. So you have to structure that. Now, that product type you're talking about is a great product type for self-directed IRAs, right?
Yeah.
No depreciation to worry about. They don't take ownership in real estate. They just own in an LLC, and there's the UBIT rules or applications or effects are minimal. So that's a good thing. But once again, what's your pool of investors? I've seen deals where you do both. Class A units, buy the hard asset real estate and expect some depreciation, some tax benefits, and Class B units get this bond approach.
Yeah.
And we sell the B units to the IRAs. So,
that's really interesting. I think there's a lot of value there too for I think especially going into that like thought leadership platform, education, marketing, like you mentioned. If you can, like Grant Cardone has done successfully, and other groups have done successfully, where they're basically using their name, their platform, their community as leverage. You can really be able to.
Well, absolutely. And I get calls every week or emails every week. You have a mentoring program. Well, no, I don't have a mentoring program. I'm not. And we go down the list. You already mentioned one person who has that, and there are many people that have mentoring programs. And I'm going to let those people teach real estate.
Yeah.
I over the years have done a lot of 2 and 3 day events where I'm teaching people about being about the securities laws and being the syndicators. And of course, that's, as we film this, that's kind of stopped because those were live events. But we're going to, I think we're going to be bringing out some virtual live events where we're going to train people in a day on this, because that's where a lot of people get their beginning information.
Yeah.
And whether they hire me or not, when they go to sit down with an attorney who's going to charge them $400 or $500 an hour, we don't have to spend money on learning the vocabulary. We already
exactly.
know.
It's kind of like the 101 and the 201.
Right. So that's where I've just generated a lot of business. A lot of my contacts have come from that.
Yeah, and speaking of which, it's a whole new business. Let's dive into a little bit of what that's about and how that can add value to our listeners.
My book?
Yes.
I have my book, A Whole New Business, right here. Okay, so this would create value to your listeners. If you'd like, I could send you a PDF of this book that you could distribute if you'd like.
Yeah, let's do it.
If I sold enough of this books, I could retire. But in lieu of that, I'd love to, I don't have a business card. No one wants a business card of me in my home. So my book is my business card today. If you would like, send me an email and I'll send you a PDF to the book, and you can distribute it as you will. That would be fine. But that is a book. I'm in the 3rd edition. This is the crowdfunding edition, and it's gone through a couple different cycles. It was really written just for real estate people to let them know that when you go out and put together a group of investors to buy property, you're leaving the real estate business. The whole new business is securities. I don't think I use the term net operating income or cash on cash in that book more than 3 or 4 times, but it's all about, well, what's new here? Fiduciary duty, conflicts, risks, Reg D, Reg A. So that's what it's about.
That's really interesting. Yeah, and I think that's, like we talked about, that's a tool. What you're teaching is a tool that in a lot of cases will allow someone to go from doing deals by themselves or doing deals, with their own capital or with their friends and family capital, and really taking that up to the next level and being able to do larger deals or more deals at the same time.
Yes.
Yeah, that's really powerful. And then as far as kind of what you've seen globally, as far as what's going on right now, how have you seen that successful syndicators have been able to adapt with kind of this unknown that's going on right now?
I haven't seen it as a problem, Evan.
Yeah.
At the end of last month, on the 29th, whatever month that is, I had some clients, and I was involved in 8 refinances that closed that day. Where I was writing the legal opinions for the lender and everything. 8. And one guy, they bought a property for $6 million in 2015, and they refinanced it, and they got a loan of $13 million. So people are, in the height of this, people are cashing in on the increase in value, and people are buying properties at increased value. So I haven't seen it be a detriment yet in the multifamily business. I think the jury's out on retail, and I don't do, for one reason or another, I don't do much retail syndication. I have a couple clients who along with their multifamily business, where cap rates are kind of compressed and the cash flow is kind of smaller than it used to be, have gone out and put together blind pools to buy Family Dollars and Dollar General stores, which do produce a little higher cash flow, or mobile home parks, which produce a little higher cash flow. I've seen that. And I've always have a steady group of storage syndicators because of self-storage.
What you, on the personal side, what do you prefer to invest in?
Well, at my age, which I'm not going to talk about, I'm liquid. And I have a problem in investing. I can't invest in anyone's deals. I just can't. There's a conflict. I can't invest in your deal for the fear that you would say to a client, well, even the attorney is investing in our deals. I just can't. And so I'm liquid, and the last deals that I sold were storage deals.
Nice.
I mean, I'm at the point of time where I have to start taking money out of my 401k and money out of my IRA. And I'm not the guy to sign up for, a 10-year hold.
And as far as your education, what do you see, like what has been the biggest impact that's had on you as being able to teach that?
The CCIM Institute. The 40 years I spent in that institute, a couple of years taking the classes and getting my designation, and then 40 years of standing in front of students, 20 or 30 at a time for a week, teaching classes on commercial real estate. I was a sponge. yes, I gave them good information, but I think
Yeah.
I always got back at least as much as I gave, because everyone does things differently, different parts of the country, different product types, different companies have different philosophies. So that was really a strength in my education. I've had an opportunity, Evan, to join many groups and participate in many different worlds, and I only participated in one.
That's great.
Once I left self-storage, I was in the self-service storage industry hierarchy and all that for a while. But when I left that, I gave that up and just stayed with the Institute. If you want to learn how to do commercial real estate, that's a great place to go.
Yeah, I haven't gone through CCIM myself, but I've heard nothing but great things from many others that have gone in, gotten the designation of CCIM, and highly recommend it. Well, let's dive into our monumental questions. What does success mean to you?
Oh, freedom. Success means letting me do kind of what I want to do. Of course, I want to work. I'm a workaholic. I work for forever and ever. But freedom means that today, when this event is over, on my time, it's about 12:30, 1 o'clock, and today it's a Friday. I'm going to drop the shovel, and I'm going to do something else. But I'll probably be back in tomorrow morning.
Yeah. Same here.
freedom and where I am in my life right now with success is I'm trying to make sure I run my life so that I can spend more quality time with my wife. We have next week 48 years.
Congratulations.
48th anniversary, and we're empty nesters, and it's always time to spend more time there without annoying her. This COVID working at home annoys her, but
yeah, that's awesome. What about daily habits or morning rituals that you have?
I have a ritual. I read a book once, and the name of the book was Free Agent Nation. I couldn't tell you who the author is, but it was an interesting book, and it talked about how in the corporate world, there was always loyalty from the top of the corporation down all the way through all the layers. But as time changed, most of the people who were leaving the corporate world and going out to be free agents found that really the loyalty was in work teams that they worked with together, okay? And so they had to go out and I find the same thing, working on projects with teams is where you have your comfort today. But that isn't what was important. What was important is this one chapter, the person said, I have trouble going to work in the morning. You don't have an office to go to. You don't do anything. So this person's suggestion was, you get up in the morning, you get dressed for how you need to be dressed that day. You get up, you get in your car, you go up and buy a cup of coffee, just like you would, and a newspaper, and drive back home, park in the garage, and walk in the door and go to work. I've been doing that for 25 years.
Wow.
Every morning. Now with this, I get up and because I've worked virtually for a very long time, I get a couple cups of coffee for my wife and myself, bring in the newspaper, drive back in the driveway and go to work. The end of the day is more complicated. When you're working out of the house, Evan, you probably know this. It's too easy after dinner to go back to work. So I'm still working on ending my day. Yeah. You have the same problem?
Yeah, exactly. And weekends too.
Yeah, it's trouble. So that's my only good habit that I have. And it really, you get out and you come back.
Yeah, I like that. It just kind of gets you in the right headspace too.
Right.
That's great. What about favorite book or book you're currently reading?
Okay. Of course, my book is my favorite book, but I'm going to give you two. Okay. My favorite book of all time,
The Shack.
The Shack, by William Paul Young, has major meaning in my life, and love it. Right now, I'm reading this. This is a book called An American Hero, Eugene Trowbridge. Not me, my dad. And this is written by V.A. Nelson, and it's on Amazon. Vic Nelson called me one day. My dad was a war hero in the Second World War. He was a Marine fighter pilot and won the Navy Cross and all this. And this Vic had taken band in junior high school. And my dad, after he left the service, went on to his love, which was music, and was a band director until he retired. And Vic had him in school for like 4 or 5 years in a row, and tracked me down and said, I've written a couple books. I'd like to write a book about your dad. Do you have any information? I said, yeah. I said, I won't help you write it, but I've got all the information in the world. And so we rewrote this book, and it's a pretty interesting story of how he got started and finally came home to Minnesota and got married and went back to be a band director, which was his life. He was conducting the band. He was conducting the band in San Diego on the day that they bombed Pearl Harbor. 90 days later, he was the first pilot to land on Guadalcanal.
Wow. That's amazing.
So that's an interesting story. And I've read it a couple times. I'm reading it again.
That's
so
amazing.
There you have it.
Yeah. All right. We got 3 books. Well, in closing, Gene, I just want to say thank you so much for being on the show today. I had a blast having you on. I know our listeners are going to get a lot out of this episode. In closing, how can our Monumental listeners reach out to you, follow you, connect with you?
Sure. Well, I'll give you our website, trowbridgelawgroup.com. My email is gene@trowbridgelawgroup.com. And you can always just call me 949-855-8399. 949-855-8399. And I'm very accessible. Okay?
All right, Monumental listeners, you heard it. Take Gene up on that. Take him up on the value that he is bringing to each and every one of you. Get a copy of his book as well. Tremendous value there. And connect with Gene. And guys, if you enjoyed today's show, make sure to share it on social media. Let Gene know you're listening. Let me know you're listening. Let us know what you enjoyed about today's episode. And finally, don't forget, any rating review really helps us grow the Monumental community on iTunes, on Google, anywhere where you're listening to our podcast today. And with that, have a monumental day.